Intel reported second quarter earnings on August 1st. The market wasn't happy, pounding the share price down to lows not seen since 2013. They announced staff cuts of 15,000, and shareholders are suing Intel, alleging they had hidden issues within the firm, resulting in the poor earnings. Intel reported $12.8 billion in second quarter revenue, basically unchanged quarter over quarter and year over year. Gross margin fell to 35.4%, down 13.6% from last quarter and 1% from last year. Operating loss was nearly $2 billion, with net income of negative $1.6 billion. Looking at the quarterly revenue, it's been trending low over the past 9 quarters, down nearly 2%, and gross profit by more than 2%. The other data points aren't meaningful as they are negative. Let's look at Intel's revenue by business unit. The client computing group is the breadwinner for the firm, earning $7.4 billion, or almost 63% of revenue. Overall growth has been muted, but year over year, up by 9.3%. Data center and AI reached $3 billion this quarter, but the segment is struggling too, down 3.5% annually and 4% in the last 9 quarters. Intel is missing the AI boat. Network and Edge reported $1.3 billion, all lower quarterly, annually, and since Q2 2022. Let's look at the operating profit of these segments. Client computing earned $2.5 billion, down quarterly, but up 25% year over year and 12% overall. Data center and AI struggles to contribute to the bottom line, and so does Network and Edge. Intel remains a CPU provider for computers. Client computing breaks down into 3 further segments: desktop, notebook, and other. Notebook is the largest business in CCG, earning $4.5 billion, or 16.5% revenue, up 15% year over year, but down 4% quarterly. Next is desktop, the best performing segment of CCG, reporting $2.5 billion, or more than 1/3 of group revenue. It's up 2.7% quarterly, 6.6% year over year, and 1.1% in the last 9 quarters. Let's look at the fundamental valuations of Intel. So GAAP earnings were a loss of 38 cents. Non-GAAP earnings were expected to be 10 cents per share, but came in at 2 cents per share. Intel's trailing PE is 84. Sales per share were $13, giving us a price to sales of $1.47. Intel's book value is $28, which is a price to book of 0.67, though I don't know if the value investors will go for Intel. Cash per share is $2.65, but the marketable securities, that jumps to $6.86. That's a price to cash between 7 and 3. Debt ratio is 0.26 and debt to equity is 0.44. Liquidity ratios look good, with the current at 1.6, quick at 1, and cash ratio at 0.35. Return on assets and equity were both under 1%. Return on capital employed is almost 0. Return on invested capital isn't meaningful. Intel's cash flow isn't that impressive, though they have been expanding PPE rapidly. Operating cash flow was just $1 billion this quarter. Investing outflow was $11.7 billion because of additions to PPE. Financing inflows were nearly $15 billion. Free cash flow to the firm was negative $10.6 billion, not exactly where the rest of the semiconductor industry is heading. Intel did pay a dividend of 25%, but that has been suspended. Intel's enterprise value is $118 million, giving us a 2 multiple to revenue and a 5 multiple to EBITDA. Intel provided limited Q3 guidance, indicating that revenue would be between $12.5 and $13.5 billion, losing 24 cents per share. Key takeaways from Intel's second quarter report: on the pro side, we think some of the valuations look attractive, such as price to book and sales. The share price is at a 12-year low. They have lots of cash. The con side shows that Intel is in trouble. Revenue is down, margins are down, free cash flow isn't good, though they are investing in fabs, but will that investment pay off? The company has cash, but is not profitable. Intel is missing the AI boom. Normally would give Intel a sell, but how much further can the share price go unless it goes bankrupt? We're giving Intel a neutral rating. We have no exposure to this company. Like and subscribe.